Danny D coming through with the numbers like always. From the market at a glance, I can see that we are basically where we were last year. 1,700 and change homes sold, 2.4 months supply. It's a little more, but it's still the slow season, so that's about as expected. Way more inventory than this time last year. And higher days on the market, more price reductions. All that leads to a cooling market. We're going to run through the details now. Danny D, you want to start us off with the home sales?
Yeah, home sales. So as you mentioned, we are what? 4 houses above what we did this time last year in November. So 1,745 home sales to be exact in the month of November this year. That is up 0% last year. And it's down 22% month over month. You can see as you scroll all the way back across to the left-hand side of this chart, similar drop-off from October to November of 24 compared to this year. This year, we were a little higher in October, and so we fell a little bit further. But all in all, this is the type of year or the time of year when things tend to trail off, and that's exactly what's happened. So no big surprise there. And again, we are consistent with where we were. You mentioned the inventory is up. The inventory is up a little over 3,900 houses currently active on the market. That's an increase of 26%. So that's definitely notable. And that's something we need to keep an eye on because what we found is a lot of the price pressure has been the result of us just being undersupplied in the market. And as we have more and more inventory, that's better and better news for buyers, which should start to erode sales price, you would imagine. So that'll be something for us to keep an eye on. 2.25 months of supply on the market as we speak.
Yeah, it's way more options, which we would hope leads to more balanced market. I think anecdotally we can say that that is tending to be true right now. Just as an aside, I have a standing search, just notification for anything that comes up in the Hilliard School District under 300,000. Until the last month or two, there was nothing. It's almost zero. And the last couple months, there's been, I don't know, 4 or 5 total, more than the rest of the year. So that's positive for buyers that are looking for affordable housing. The list price versus sales price is something we always keep track of. Number one, because it shows us how the market's doing overall and what to expect as sellers and buyers. But we also track it for its change from this time last year, and then make sure that we're still increasing. But Danny's going to go through the numbers here. What do you got?
Yeah, I mean, the big thing is we were looking back at September there. You see we had that weird kind of wobble, quite a bit of a drop off in both the average list of the average sales price. So we're really excited to see what happened last month, when we did this readout. And of course, things kind of bounced back to what we would call to be a normal range for this time of year. It's down from the highs in the summer, but not quite as low as what we had seen in September. And you can see now that last month's numbers just were flat, right? We had an average list price of just over $419,000, average sale price of just over $403,000. And you can see the space between those lines is pretty consistent month over month. And this is kind of normal for this time of year, right? Things have slowed down. You start to see a little bit of distance between where people are listing versus where things are actually selling. And we think that typically that's just a reflection of a lower level of competition for the available homes that are out there. So again, if you think back to the previous slide, we've got a lot more homes on the market, a lot more inventory. People can kind of pick and choose, and they can go with the best house in their price range. And what that does is it puts pressure on everything else. So we're seeing that here. The good news is while we're flat month over month, we're actually up $16,500 on average for the sales price year over year. So that's a 4% increase. So if you're not buying or selling and you're just sitting and holding your home, it's up about 4% in value year over year, which is always good.
Mm-hmm. And for those of you that are waiting for interest rates to drop, just remember that you've probably been waiting for more than a year or two, and we've just kept going up in price since this whole inflationary interest rate thing started. 4% over this time last year. That's not a surprise to us, but you'd have to drop a lot to see the benefit of not being a homeowner right now. So just keep that in mind as buyers entering the market. I know it's getting tougher, but hopefully we'll see some affordability changes with the balancing of the market. Percentage over and under asking, this is about as expected. Again, percentage of houses that are going for over has shrunk. That's seasonal and a product of the balancing market. But Danny, of the details.
Yeah, we don't really have a bunch of numbers to share here. You can just kind of visually see on the graph, this time, November of 2025 compared to November of 2024, we're kind of similar, right? That green stripe is anything that went 5% or more above the asking price. The orange stripe on the bottom is anything that went 5% or below the asking price. And so you can see that they're pretty close. It's a little bit higher this year in terms of those going under asking, and a little bit fewer that are going above asking. But again, seasonally, it's about the same. We'd expect this to be roughly the same for the next several months as we get into the cold season and as things kind of slow down for the end of the year. But that's the gist of it.
Yep. And as far as days in the market, if you're putting your house up, what can you expect? Median's a better indicator here. 18 days in the market. This is up 5 days on average, median from this time last year. But that's another product of the balancing market. I feel like as long as you know what to expect here, that's 2.5 weeks. It's still a pretty quick turnaround to sell your house. Danny, do you have any other details on that?
Yeah, I mean, I think, again, if you look at the pattern's the same. You can see how things have increased going into November, both this year and last year in terms of average days and the median days on market. We are a step out of phase, as you mentioned, and it's been that way for a number of months now. I mean, we're 18 days is the median for the most recent month compared to 13 the year before. In October, it was 16 compared to 9 the year before. So we're just a little bit of a step out of phase there. But again, the pattern is the same, and we'd expect that this is going to continue to do what happened last year, which you can look at December, January, February, March even. That's kind of where things went up. They crested. That's the slowest time of the year before things really start to pick up as we get into the spring.
Mm-hmm. As expected. Again, a little bit more because of the shifting market, the balancing market, we'll call it that. Price reductions have gone up as well, although this is almost exactly where we were this time last year.
Yeah, again, just same level, just a step out of phase, right? We peaked out at 42% last year. That was January. We just hit 42%. That's November of this year. So things could go a little bit higher yet, but we'd imagine that things are going to maybe go around that corner over the next several months. Point is, if you are buying right now, you should be looking for those opportunities where homes have either reduced in price or definitely not feel compelled to make an offer that's above asking, right? I mean, there's a lot of pressure on sellers right now, and you can see that as evidenced here, where over 40% had to reduce their price before they actually got a sale.
Yep. And 40%, that's a big number. That's a big number of price reductions. So just for the record there, but some good news, mortgage rates have hit the lowest they've been for a long period of time since 22? Since before our chart says.
Yeah.
0.19 is the average.
Yep. It looked like it dipped maybe really close to that. What is that? It's somewhere in the middle there, like in October of 24, but it wasn't there for very long. And yeah, you're right. So, I mean, if you think about it, we're now at a moment in time where seasonality, things have slowed down a lot. There's more inventory than ever. There's more price reductions than ever. Mortgage rates are lower than they've been for the most part, like you said, for the last couple of years. If you're buying right now, wow, this might be your moment, right? So you've got a few months here where things are probably going to be cooled off. You've got some good inventory to choose from. Hopefully you can make a move and lock something up and get into a rate that comparatively for the last couple of years is pretty low.
That's right. And with the rate and the seasonality and the lower prices, like you're saying, it's a little bit more affordable out there for buyers. And it's still not bad for sellers. It's not a bad time. You probably have a bunch of equity in your house. So just keep that in mind. All these trends are about as expected for a balancing market. We'll keep you abreast of any major changes. If there's spikes, we'll highlight those on any of these numbers. But this is about as expected until we get to the 45-day on average price. I think that it's going to continue to climb on all these stats as the market bounces out. So thanks as always, Danny, for setting us up. We will let you guys know about the next one and if there's any news in between.